All right, doing a summary of a couple trades that I missed for October 15th. Oops, October 15th, 2025. To give you some quick context of where we are in the day. All right, so in the overnight session, of course, actually yesterday had a really big drop, right? Came right in the overnight, came right back in the uh, regular session, and overnight we dropped, and then it's just sort of been this grind up in the overnight session. So to me, this is pretty extended. That's just a data piece I'm going to be using taken forward. Uh, Not really any other usable spots on the chart except for maybe you got prior. Let's see here, weekly prior value area low right here. Otherwise, we're just sort of moving up in the general direction in bullish behavior, right? So that's higher time frame. Moving down to the profile, you see it yesterday. This is Tuesday. It's Monday. All right, so in the regular session Monday, we opened here, price traversed down right here, and then we just grinded up on the entire day. Made a couple good trades in that one, and then the overnight session right here, we are net long, right? So here's the open, here's the close. We are net long, not 100%, but pretty close. So the idea is that we're about to open right here. Are we going to close the gap down to that? And then if we do, are we going to be going further? So the narrative going into today would be right here at this level, right here. If we get into the single prints and we start to move up, you would expect us to, price to move pretty fast through these single prints, and then maybe halting right here, or just trying to find out if we want to monitor for continuation or rejection. But we are recovering pretty well this big gap down that we have on Friday. So the name of the game here is we are net long. We're going to find out if we're going to be closing that gap, if we're going to be moving up. We would like to see aggression. We would like to see divergence in delta, cumulative delta. And then, of course, just tempo, which is something that's a little bit more subjective, but it is easier to spot the more you start looking for it. So going over to my execution chart, we're just going to we're going to start here at 30 times speed. So we've got the open right here. I'm going to speed it up a little bit. Two specific trades that I missed, and that's the reason I wanted to make this video. All right, so delta's going up, price is going up as well. We've got some decent volume on the day. Okay, right here. This is a low volume node. Let me just put that on a higher time frame chart. Yeah, all right here. So this is an important area, actually. This is a low volume node on the 5-day and the 20, and then also on the daily right here. So low volume node is ideally where you'd like to be placing your trades, or at least using it in your trade idea. Right here, okay? We had a good amount of volume on this bar, right? This down bar. Delta was doji at best, right? So that's a very aggressive trade. I want to bring that up because I would like to start taking those as I become more advanced in my understanding. And then also just maybe take trades like that with a little less risk, a smaller size. But this is a perfect trade location right here. We came down, we tested DVA, or we tested VWAP, which was also confluent with prior day high, and then also this low volume node. And what's more is that because we can't use a whole lot of information from the market profile yet, because it's not mature enough throughout the day, if you're going to be taking trades, you really got to lean on price action, volume, cumulative delta, and then just simply context. So the context, if we're not using market profile, would be we've seen positive delta all morning, It is now 8:48, so we're about 20 minutes into the session. Price just came down to meet this low volume node, which again is also VWAP and prior day high. And yeah, that should be enough to take a trade, to take a swing. So one of the things I've been doing to help with my trades would be my trade confluences. So that's right here. Essentially on every trade, I've got 8 different things that I'm sort of thinking about. One would be the higher time frame levels or structure. You got market profile levels or concept, cumulative delta, DVA location, short-term structure, trapped long shorts, excess, and volume, right? So essentially those are, it's somewhat of a point system right now, a loose point system. I ideally would like to have more than 4 if I'm going to be taking a swing. Obviously, the more the better. And then like 7 or 8 is an A+ trade. But really, as it stands, this is just to make sure that I don't forget key things, because it's really easy to get too zoomed in on price sometimes while you're in the trade. So if I took this trade right now, this is the details that I have. Higher time frame levels or structure. We had resistance that became support near that low volume node. So right now, this is what that looks like. This is what I'm looking at for, this was resistance before, now it became support. You see that candle came down and kind of tested that area. That's also the low volume node. We didn't come down to test that right to the tick, but zones, not lines. So that's enough for me to say that we did have some higher time frame concepts or structure in our favor. Market profile levels or concept, that's too early in the day to be using that. And then there's nothing really else that I could be using from it, like the overnight holders being offsides or something like that, because we're not. Cumulative delta, what I thought was in our favor here was price moved lower on the last candle on the high volume. So that's this candle right here, okay? Delta did not move with it. The level was rejected. The level that was rejected was the VWAP, prior day high, and low volume node. So that's this candle right here, this guy. We came down, tested the 24-hour VWAP, or just VWAP, prior day high, and then also this is the low volume node, and that is the candle that, again, high volume, but delta did not follow. So sellers just didn't show up to that candle, which makes me believe that we should take a long. This was a little more aggressive, but nevertheless, I just wanted to note this so I can keep an eye out for it again. Short-term structure, we basically had bullish structure all morning, right? We're just moving in an uptrend. This right here didn't even break this. I mean, you could say it broke some of this structure right here, but for all intents and purposes, we've been in a bullish trend all morning. Trapped longs and shorts, I didn't see anything on market profile or anything to suggest that you're going to have a fair amount of traders off sides. Excess, did not have anything. Volume, this is where we had good volume all morning, right here, paired with delta. So delta's moving up with that high volume, that's good. Then we had high volume on the pullback candle, but delta did not follow. So in this case, ideally you'd like to see low volume on here. Low volume on this delta candle where it's kind of indecisive, or even just the candle continuing to move up on that pullback. But that's enough for me to count that. So we've got 1, 2, 3, 4, 5, right? 1, 2, 3, 4, 5. 5 out of 8. Enough to take a trade. I mean, this is going to be a B setup, so you would ideally be doing lower risk. But this is a more aggressive trade, and let's just see how it would have played out. Obviously, played out well. You've got volume and delta on our side. At some point, it turns. But the whole reason I wanted to do this was just to see that execution. All right. And if I didn't, it doesn't really matter if I took that trade or not. So that trade obviously played out. So from that candle here, let's call it 37 to maybe where you would have gotten stopped out would be, let's see here. Stopped out like 50. So it's like a 10-point trade at minimum, right? So that's the first trade that I missed. That's a little more aggressive. I don't feel as bad about that one. That's going to be a little more advanced. for where I'm at. But again, wanting to look at this next trade. Bear with me. All right, so this is actually going to be pretty much where the next trade would be. We've got this long run up, and this is my thought process going into this in hindsight. So you've got a lot of volume right here, a lot of volume, a lot of buying delta, lots. Starts to die off a little bit on the high right here. So then you start thinking, okay, is this rally going to be over? How deep is the pullback going to be? This starting to go sideways right here with delta going down and volume decreasing as well. Doesn't give you a lot of optimism about the move continuing, but you just want to wait and see. So price comes back into developing value area right here. And again, this leg up, you just know that if we're going to accept higher, you're going to want to have a pullback or some sideways consolidation to feel more comfortable about that move. The other thing I wanted to point out right here is on the market profile, you have A period, B period, C period. A period was one time framing, B period was one time framing. Then in the C period, we stayed inside of B period. So that should tell us, because we didn't break that high, it's not great. It's not looking great for the continuation for the upside. On the downside, technically we have not broken one time framing yet. However, when we started in the D period broke C period right here. That is another clue, another hint the market's giving us that we're probably not going to be going higher, at least in the short term. And because we broke one time framing, then more than likely we will be going lower, or at least that's the expectation. So this right here, this pullback, this would have been the best entry right here. So right basically at 67.50. Price was moving down on this lower volume, and it just simply kind of told us that we're probably not going higher, at least for right now. So that's where I could have gotten in. This is a better trade than the first one that I showed, and here's why. All right, for this trade, which is going to be a better trade than before, this is what the confluences look like. The higher time frame levels are structured. Support became resistance from 10.9. Okay, so what I'm seeing here on my higher time frame, this is the weekly. Right here, the support became resistance. This does feel a little bit like I'm searching for things to be confluent. And if you're looking for something, then you're likely to find it. So I'm trying to be somewhat unbiased, but this is pretty unmistakable right here. The last time we visited this area was when we broke right through it, and the time before that was on the 9th. And this area that right here that was support before is now becoming resistance. So that's why we do get that confluence with right here. The market profile levels or concept, we broke the one time framing. Again, that's what I just spoke about right here. This is a big deal. Jim Dalton had kept talking about how you want to be cognizant of when we break one time framing, because when you're one time framing like this, where the previous period does not come below, the new period does not become below the previous period, that is a signal that we don't have as much conviction, in this case, to the upside. Okay, so that's why we get that confluence from market profile. Cumulative delta, none, right? I didn't see a whole lot that we could use right here. There was no divergence. This is just a little bit more extreme than this down move, but not enough to hang my hat on. DVA location, we accepted back into DVA. The laws of market dynamics stating we'll traverse the value area. Short-term structure, really don't have anything to lean on. We didn't break structure. This is still bullish. Trapped longs or shorts. Yeah, we are going to have a lot of long holders that are going to be offsides if this fall continues. That is all of these people that slapped the bid this morning. With all of that volume, they are all going to be offsides if we continue to move lower. Excess, I said ish, kinda, sorta. We had excess above this level, which is also weekly value area low, and then also the prior month value area low. I said ish because those levels are just weak in general. If they were more powerful, like overnight high, prior day low, prior day high, point of control, settlement, that's different. But because there are two right there, I'll give it a little bit of excess right there. Volume, we got volume started to decline after we made the high of day right here. So you can even see we've got a little bit of divergence right here where price continued to move up and delta started to move down. And then we just have volume drying up right here. It doesn't matter that these bars are red. It does matter that once we hit this level where we should have broken out, we didn't, and volume dried up. So that tells us that we're just not going to have volume, which is also aggression in breaking through that level. So how many do we have here? 1, 2, 3, 4, 5, 6. So we got 6 out of 8. That is B plus or maybe an A setup. Should have taken that trade. Let's see what happens. Of course, I know what happens, but I'm just going to make this go really quick. Price just fell off of a cliff. Boom, boom, boom. Continue to move down. Come back up, test the prior day high. Boom, boom, boom. Continue to fall. Prior day close. Go all the way down. I mean, we dropped. So anyway, don't miss that trade again. Come back, watch this video. Do not miss that trade again. Right here, price failed to sustain higher, so you take the opposite trade. If you are going to short in an environment like this, you want to short at the highest level possible, which this was the highest day. I mean, you're going to see this setup again, man, and you got to take it. So, thanks.